Gold is going up. I'm frightened that I've missed the boat. What would you say to that? That's 10%, 10.6% average growth over the past 25 years on the gold program that you
No, no,
follow.
that's on the gold price.
Oh, that's on the gold price. Right.
Yeah.
Okay.
You have to be careful to say it's guaranteed to help you with inflation because it's not, because gold price goes up and down, whereas inflation only goes up.
Hello, everyone, and welcome to Sphere of Success, the podcast that looks at challenge and adversity in business and how we alchemize that to growth, resilience, creativity, and innovation. And today we're talking everything that glitters, perhaps is gold at the moment, because it has absolutely rocketed gold. And we've got the most amazing guest whom I'm going to tell you all about. So, the theme of today's podcast is the future landscape for gold, wealth protection, inflation, and smarter investing. And today's guest is Simon Popple. And it doesn't get much better than Simon because Simon is the founder of the Gold Program, a system designed to help investors, especially those over 50, achieve returns better than gold price itself, which has averaged over 10.6% annually over the last 25 years. With inflation threatening to erode savings, Simon's approach to gold investing offers a way to protect purchasing power and grow wealth carefully. His two random portfolios are currently generating impressive returns, and you can follow their performance on his LinkedIn page. If you're looking to understand the future of gold and how to invest wisely, this episode is for you. Welcome, Simon. It's wonderful to have you on the Sphere of Being podcast today.
Great to be here. Thank you very much.
Right. So, first of all, I'd like to let you know, the listeners and viewers of the podcast, what was it that attracted you to gold? Why gold and why now?
Well, gold is it's been around for thousands of years. It's not some new kid on the block like crypto or things like that. So it's got form. And we use it in our everyday language. They've been as good as gold. I don't want them to marry that gold digger. I want to win the gold medal, things like that. But it's an asset class that even though we talk about it almost daily, you know, even Bitcoin is depicted as a gold coin. Very few people have it as an investment, and I think they should include it in their portfolio.
And interesting you say that. So, I'm thinking of the macro level now. Now, just to let everybody know, we're recording in 2025. We're recording in October, well, September, coming up for October in 2025. We've just experienced in gold price an incredible uplift in the market. And it would be great for Simon to tell us perhaps why that is happening at the moment. And what I'd like to ask actually, Simon, is why do countries buy more gold?
Well, I think you need to look at sort of behind the scenes of what's actually driving the price. And I think there's four things that you should look at. I call them MIDI. The M is market uncertainty. The first I is interest rates. The D is debt, and the second I is inflation. And but all these are kind of pointing towards a higher gold price. You've got lots of market uncertainty. Lower interest rates is good for gold. Higher debt is good for gold, and inflation is good for gold. So um, d despite the price being high, uh, there is potential for it to go significantly higher. And I think until one of these drivers goes into reverse, I'm a buyer rather than the seller.
It's interesting you say that because it has been quite a stratospheric rise over the last few weeks, in fact. I mean, gold was hovering on the spot price of gold, which I look at on a daily basis, having been a gold investor myself. And we were looking at it breaking that 3,400 barrier US dollars for the spot price. And now it's moved up to around the 3,700 3,750 US dollars spot price. People might think, oh my gosh, we're due a massive correction. We're due something which is going to come way back down again. And you've mentioned that actually these four leading indicators that you put around this doesn't seem to be changing anytime soon. Perhaps you could go into a little bit more detail around the the way in which the indicators and why perhaps they're looking to continue in this particular upward trend.
Yeah, no, sure. I mean, I think, you need to remember you can't print gold, whereas you can print a lot of other things. Um, but going back into these indicators, there's huge market uncertainty. Now, um, in terms of the gold price, it's largely been led by the US. So when I talk about these four drivers, even though I think they apply across the world, I think they particularly apply to the US. And so there's clearly a lot of market uncertainty in the US, not just about their potential involvement in various wars, but tariffs and things like that. Um, and I think that until we've got greater clarity on what's going to happen in the US, then I think we're going to continue with this market uncertainty. Uh, lower interest rates are good for gold because gold doesn't yield anything. Obviously, you can buy companies, but if you buy physical gold, it doesn't yield anything. So, if you've got the opportunity of buying, let's say, £100,000 of gold or £100,000 of bonds, if the interest rate is, I don't know, let's say 4%, you probably think, well, actually, I'd rather have the 4% on my bonds rather than nothing on gold. But if it goes down to 3%, you're like, well, actually, we've got a bit more of a decision to make. So I think that lower interest rates, obviously the Fed cut recently, and there's talk of it cutting again. Um, Debt, that's only going one way across the world, but particularly in the US, it's getting worse and worse. And I think what is particularly interesting about inflation is, despite it going up, they still cut interest rates. And so that's quite um, an interesting move, because if inflation goes up, normally you increase rates to kind of try and calm things down a little. But inflation went up and they cut rates, which the reality is it will probably make it worse rather than better. So um, I think one of the really interesting things about this is it kind of suggests that the Fed is perhaps not totally independent and is listening to the politicians. And if that's the case, then you'll probably find the market uncertainty uh, ratchets up as well, because people view the Fed as independent, but if its actions indicate that perhaps it isn't as independent as they thought, then that could well lead to greater market uncertainty and potentially higher gold prices.
And so, coming back to my original question, why do countries buy gold? Can you give us some insight on that?
Yeah, it's countries buy gold because um, it's first of all it's universal. So it's one of the few universal assets. If you have, let's say, a property in London, um, that's very pertinent to the UK market, but it's probably not pertinent to the global market. And gold has got value wherever you take it in the world, whereas property, if London's buzzing, then you'll probably find the prices go up. If it's not buzzing, the prices probably go down. And but gold is a universal asset, so I think countries like it because uh, if they can say we've got X tons of gold, then it kind of gives them a bit more kudos in the world, for want of a better term, and it helps kind of back their currency. Now, I'm not talking about a gold standard or anything like that here, but if you've got, let's say, um, a $1 trillion in circulation, and you've got the value of your gold is perhaps, let's say, a quarter of that, then to an extent you can sort of say, well, look, our currency is quarterbacked by gold, and so I think the more gold people have, the stronger they feel in terms of their currency, and uh, a strong currency is very helpful, because if you've got a strong currency, if you want to buy from another country, if your currency is strong, then those goods are actually cheaper for you, because you're your exchange rate is working in your favor.
So tell us, from an individual investor perspective, people thinking, yes, okay, gold is going up. I'm frightened that I've missed the boat. What would you say to that?
I've got various charts that show that in the 1970s bull market, not just gold, but gold equities went significantly higher than where they are at the moment. And no, I don't think you've missed the boat. I don't think you've got the best seat on the boat. And perhaps you haven't even got a seat, but you can still get on the boat. And it's a bit like, the property market back in the day where everyone thought, the prices were too high and didn't get in. And then they just, the prices went up and up and up over a number of years. And at some point, people probably had to jump into the market. And I think they probably had a very uncomfortable year or two, um, because if prices crashed, they were screwed. And I think the same, could well happen with gold, where you can probably get in now. Um, will it correct? We don't know, but the drivers are all indicating that it won't correct or significantly. Um, and if you get in now at, let's say, 3.7, you're probably kicking yourself that you didn't get in at 2.7. But if it goes up to 4.7, 5.7, um, and you're still not in, then you really will kick yourself. And I I think what I would say to people is, there's no harm in dipping your toe in the water, and let's say you've got 10 grand you want to allocate, perhaps allocate just a grand, and if the price goes up, then you kind of your grand is doing a lot better, and you may think, well, actually, I'll put another couple of grand in or whatever it is. And if the price goes down, you're like, well, I've only got a grand in. I'll put 2 grand in, and you don't have to do it all in one go. And I think that's one of the lovely things about gold is it's sort of divisible, and with a property, you couldn't just go and buy the spare bedroom. You've got to buy the whole thing. Whereas with gold, you can kind of inch your way in and inch your way out.
And so, thinking about this from the perspective of getting involved, and as we say, we're not giving a financial advice here, but we are giving insights from our knowledge. So, there's no financial advice going on. Please always speak to your independent financial advisor or expert, etc., so that you can get really, up to the minute information from them. However, what kind of how can you get involved with gold? Because there's a number of ways in which you can purchase gold. We were just discussing this before we came on air. So could you take us through the ways in which you can get involved in purchasing different types of mechanisms to get involved with gold?
Yeah, no, absolutely. I mean, this is really what the gold program is about, to try and educate people about how they can do this. But broadly speaking, you can get physical gold. I use that. I have a fantasy football analogy, and I view that as a stadium. I think that's a good starting point. And there's various organizations where you can buy gold from, and importantly, they can store and insure it for you. I think a lot of people think they buy gold and they'll have gold down the back of the sofa or in their house. You don't have to have that. I've bought a lot of gold and haven't seen any of it because it gets stored and insured elsewhere. Um, then you can buy funds. You can either buy sort of ETFs, which are sort lots of different types. Some are
And those
gold.
are exchange traded funds, aren't they?
Exactly. And I think that they're pretty good if you want to just have it for less than a year. Um, but then you can buy mutual funds, which are companies. And I think the difference between the two, because ETFs also can buy companies as well, but one tends to be actively managed and the other tends to be passively managed. So if you just want to buy a miners index, then yeah, an ETF might be for you. But if you want to buy a fund where you've got a good fund manager who knows what they're doing, and is buying and selling for the fund, then a fund is more uh, your cup of tea. And then you've got equities, but mining equities are massively different. And this is one of the things I teach people about in the gold program. You could have a goalkeeper, which is a large multinational company with a market value, probably, well, certainly over 15 billion. Then you have defenders, which are still very large, but market value probably more like 5 to 10 or 5 to 15 billion. And then you've got midfielders, which I'd say, one to five. And then you've got your explorers, which I view as forwards, which are, less than a billion. And the whole idea of it is to try and put a portfolio together that's right for you. And I would view the stadium, the funds, goalkeepers, defenders, and midfielders as investments, but I'd view the forwards more as speculation. But the joy of them is that if they come off, you can get 50, 100 times your money and literally change your life. So I think it's nice to have a bit of both. You've got your money working for you, and hopefully generating a good return, and then you've got a little bit of money in something that could change your life. And if it happens, it's nice to be living with the knowledge that you've got some investments that could really take off. And my daughter, one happened for me, and she's been privately educated, and she goes skiing and all that, all because of this investment. And because I put one of my mates into it, and he's got holiday houses all over the world. So we've been using those for free because he's so happy because he made so much money.
Well, that's it, isn't it? And please, everybody, what glitters necessarily isn't gold. Just make sure that you do your due diligence. Make sure that you know that sometimes things aren't as rosy as they're painted out to be. So just make sure that, you know, the love of the quick buck, as it were, that you've done your homework, because those things should be a balanced part of your portfolio, and not necessarily, unless your appetite for risk is huge, the one thing that you're going to dive into. So I always think, having a basket of investments going on at one time can then even things out. But obviously, again, that's up to each individual. How can gold then, looking at, say, crypto or other more commonly invested in equities, stocks and shares, etc., how does gold compare to those types of investments?
Well, gold has actually done phenomenally well. There's a fact. I've got the US numbers. I don't have the UK ones to hand, but if you bought a house in 1920, a lot of people think property's done phenomenally well, but if your average house in the US in 1920 would have cost you 305 ounces of gold, I think it was about 629 pounds or something like that. Um, Fast forward to today, your average house in the US would cost you, I think, 140 ounces of gold. So,
So let's do those numbers again, because the first one back in the day, how much gold did you need from the ounces perspective to buy a house?
right, let me actually give you the real numbers because I've got my web. Right, 1929, it sorry, 1920, 305 ounces of gold.
305 ounces of gold, right? And that equivalent sort of US dollar value would have been around,
Yeah, the new home in 1920 was 6,300, but
and
the
that's obviously not in regards to inflation, because of course now it's
oh yeah, exactly. But I think this is the point that this is, gold can help you in terms of inflation. Um, and the gold price is $20.67. So 6,300 gold price, $20.67. So 305 ounces of gold gets you your new home. In 2025, it's $450,000. But the gold price, this is a gold price of 3,225. Obviously, it's gone up a lot since then.
yeah,
Um, and that's 140 gold ounces. So that's less than half. So
indeed, yes,
in
because the
2025,
value of gold has increased so much that you need less of it, but you've got more. you've got more for it, if you see what I mean. Yeah, there's more value in it, less risk,
Exactly. I
but
mean,
more value.
if you had kept your 305 ounces of gold in 1920, you could actually buy two properties now and still have 25 ounces of gold left from your 305. Now, the gold price has gone up, looks like 20%. So you'd have more like 30 ounces left from your 305 ounces. And if the gold price continues to go up, um, it's insane what if you do the comparisons. And I did it in the UK. I don't have the numbers to hand, but um, it was still significantly better, and I mean a lot better. I don't think it was double, but it was um, probably at least sort of 50%ish. Um, and property, people view property as doing very well, and I think that's one of the misconceptions that people they don't take into account inflation. And what I like about gold is uh, you have to be careful to say it's guaranteed to help you with inflation because it's not, because gold price goes up and down, whereas inflation only goes up. But I think over the longer term, going back to that 10.6 that you mentioned earlier, that's a lot higher than inflation. And so, if you've got gold, you hold it for a long period, then with a bit of luck, it'll protect your purchasing power.
That's it. I think that's worth going into more detail on actually as to how gold is a good hedge against inflation.
Yeah, I mean, I think it's one of the things I love about gold, to be honest, is um, it's you can buy it in a format where you don't pay capital gains tax, and you've got a bit of a trade-off between you've got a premium to buy coins, Britannias and sovereigns in the UK if you want to try and mitigate capital gains tax. And obviously, you need to speak to a tax advisor about this, but uh, it does give you a way of trying to protect your cash from from inflation. So, uh, but it's slightly the other way around. At the moment, you you put your cash in a bank account, and you've got, I don't know, 3% interest rate, whatever it is, and you can get your money out in a year's time. With gold, it's sort of you switch it on its head, um, because you don't know. You know how much value you've got, but you don't know what's going to happen to the price over the next year, 2 years. And I think with inflation, uh, when it was previously around 2%, you could say, well, I'll put this cash in my bank account, and in 2 years' time, I know I can buy that car. But if inflation starts to really take off, then you've kind of got a headache because you know how much money you'll have, but you don't know if that's enough to buy the car, if you know what I mean.
Well,
And
the
so,
other thing is your money in your bank account is being eroded by inflation, and the purchasing power then is less because your car is going up in value.
yeah, well, exactly, yeah, and that's I think that's one of the reasons why I think people are looking at putting. Now, I use the term some. You don't have to go in with both feet, but just having some money in gold, and if gold continues to go up in value, um, then you could be in a lovely position where you can buy the car without touching the rest of your cash. Um, and but yeah, I'm a great believer in having both, but you a lot depends on how much money you've got in the bank as well. But I think you've only got £85,000 insured by the bank. So if you've got more than £85,000, um, then I'd certainly look at either having multiple bank accounts, so you've still got £85,000 insured, or perhaps stick some of it into gold.
And the other thing as well is, I can only speak from the UK perspective. I'm speaking from personal perspective here as well. Um, Banks are becoming tighter with regulation, etc., which is not a bad thing necessarily. Accounts are being frozen and blocked for various reasons. Some people are saying, they've been on the internet and all of a sudden their accounts has got blocked. Um, People are making transactions and their accounts get blocked. I'm not saying that that's not for valid reasons, but it does seem to be out there that banks are tightening up their control of our money. And with, let's say, the HMRC, I don't know if it's passed the law, but it's something which is being mooted, is perhaps able then to go directly into our bank accounts and withdraw funds from a tax perspective. Um, I think that perhaps the sentiment around this is what I'm trying to say is having your eggs all in one basket, say in the bank, it may be worth looking at other mechanisms such as gold to be able to have something that's outside of that banking system. And you mentioned gold bars. There's also gold coins, etc., as well. What are the benefits of holding? And as you say, it doesn't actually have to be in your own person or in a safety deposit box that you put in. It could be handled for you without you ever seeing it. But what are some of the positive benefits about having physical gold?
Well, bars and coins, you have to decide if you want gold, and if you want gold, then you want to buy it in a format that is suitable for you. Bars, uh, you need to speak to your pension provider, but providing they're of a certain purity, you may be able to have them in your pension, which again, going back to capital gains tax, can be very efficient because you buy some gold bars in your pension, and they go up in value, and you don't pay capital gains tax on them. And it with your pension, going back to the 10.6% a year average growth, that's pretty good. And
And
so,
that's 10%, 10.6% average growth over the past 25 years on the gold program that you
no,
follow.
that's on the gold price.
Oh, that's on the gold price. Right.
Yeah.
Okay.
I'm far too young to have been going 25 years, but yeah, no, that's the that's what's happened to the gold price. And with the gold program, what I do is I say to people, right, let's not just back the gold price. We don't want all your eggs backing the gold price. What we do is we'll put some money in funds and in goalkeepers, defenders, midfielders, and forwards. And so you've got your money in lots of different um, positions or investments. Yes, gold is highly, highly relevant, but it's not all about the gold price. And I think that's important because you could have a company that, let's say, finds more gold or reduces costs, gets more profitable, and the shares go up, and they could go up a lot more than the gold price. So um, or they could find some copper or some silver or another commodity. So, what I like about this way of investing is it helps you, uh, you know, get a decent return, but you don't have all your eggs in one basket.
And so you've mentioned about the person with, 10 grand and spending it, a little bit of it, testing the water with gold, etc. What kind of budgets do you think people should have to be able to take advantage of gold in its various forms?
Yeah, I mean, I think it's with the gold program, I think you want to be spending at least 10 grand because you want to have a diversified portfolio, and you probably want to have at least £800 in each position because you've got buying costs and selling costs and obviously the cost of running the account. Um, but if you just want to dabble in gold, I mean, I did a promotion last week where you got a free coin. I had to buy some to send out to people earlier this week, and I think it cost me 200 and something pounds for a quarter gold sovereign. So, if you want to get involved in the market, you can get involved for, as little as 200 and whatever pounds, well, let's say less than £210. Um, but yeah, yeah, you don't have to go in with both feet. And, you could even buy silver. A silver coin is, I'm guessing probably about 35 quid. So you don't have to spend a fortune. And what I'd say to people is, sure, if you've got a lot of money, we can work together on the gold program. But if you just want to get into the market and just put a few quid in there, um, then set up an account with someone like Bullion by Post or Sharps Pixley, two very large UK. Um,
There's another company called Roman Brothers as well, which
yeah,
did something. There's many
there's
different.
lots of different companies. I mean, all I'd say is do your due diligence on whoever you use. Um, when I say due diligence, I like them to be members of uh, the LBMA, which is the London Bullion Market Association, um, connected to the Chamber of Commerce, or things like that. You kind of want to check them out. Don't just sort of uh, buy gold with anybody. But yeah, you can start off really small and and then grow it if you want to. But all journeys start with one step, and I would suggest that you take that first step.
Interestingly enough, just to share with the viewers here, is that when I have bought some gold coins and they're legal tender, so they don't fall within the VAT thing and they don't fall within the capital gains either, capital gains tax. Bought some gold coins. I was the people that were helping me were very knowledgeable, so that's great because at that point I didn't know very much. They're graded coins, they're of a certain quality. You need to do some due diligence around this before you start. I mean, my first protocol would not be to buy anything on eBay, because you're not quite sure of that, but I'm sure people do. I'm sure there's a massive market for it, but that wasn't something that I chose to do. So I went through to a reputable broker. And then just lastly, because the amount of money it costs to buy an ounce of gold now is significant, as you're saying, the spot price, they call them Troy ounces because they're certain purity. I think it's 99.95% or so of purity. If you're looking about US dollars, I think it's around, at last look, 3,700 on the spot price. There's another value added, it's called numismatic value on coins because they are collectors and collectible items. So there's a slight uplift in the price that you pay on collectible coins. But if you buy things that are legal tender, there's no VAT or capital gains tax. And so the last purchase I got was to get, as you say, quarter coins of a purity of gold that and sovereigns have different purities, etc. So it's worth doing your homework. It's worth thinking what your risk profile is. I always say if you can't afford to lose it, don't spend it because we would hate to think that anybody does something that's going to cause them distress or anxiety. That's not what this is meant to do. But again, if you have sufficient funds and you think, yes, this is worth a go, because it doesn't always mean that an upward market stays an upward market, can come down again as well. We can never completely predict the future because otherwise, life wouldn't be like it is. But what we can say right now is, as you were saying, Simon, the fundamentals around this, the key indicators look likely that things will remain on an upward trajectory. But like anything, it doesn't go straight up. It goes up a bit and then it goes down a bit. And we call those things having a bit of a breathing space where people take their profits from the move upwards and it goes down a bit and then it can go up a bit and down a bit. So you just need to make sure that when it does go down a bit, you're not, which I used to do, is a panic. Oh my goodness, it's all going down. It's gone down a few points. This is more longer term, unless you are an investor that likes to trade quickly and you've got that appetite for risk, then I look at this as a longer term investment so that I'm not looking at it every 5 minutes and thinking, oh, it's gone up a bit or it's gone down a bit. I'm just thinking, right, I've bought this and I've held it as an investment. Are you of similar mindset, Simon? I'd like your thoughts as to why
Yeah, no,
you said
absolutely. I
that.
mean, I think when you get into the market, you need to go into it with your eyes open and decide, are you a long-term investor, a short-term investor? What are you looking to do? Um, And I think one of the things I particularly like about gold, to be honest, is this liquidity issue.
Mm.
Because not only can you sell physical gold like today and get the money in your account probably in a few days, but if you invest in a fund or companies, quite often you can put them in your ISA, and so you can invest on a tax efficient basis, and because they're listed, if perhaps with the exception of the forwards, which tend to be, some of them can be quite small companies, but excuse me, certainly with the funds, goalkeepers, defenders, midfielders, if you want to sell them, you can generally sell them, within 24 hours, or actually within an hour. So um, it's incredibly liquid, and I think that's uh, one of the attractions of it, that you you can both invest and have the liquidity, and there aren't many asset classes you can do that with. The uh, yes, you can invest, hope they go up in value. If they don't, and you want to sell, something happens where you need the money urgently, then you could find yourself first of all trying to sell an illiquid asset and you're desperate for cash. Um, it could also be a terrible time to sell the asset, and that's, don't get me wrong, it could be a bad time to sell gold. But one of the things I like about gold is, let's say you need, I don't know, 20 grand and you've got 100 grand's worth of gold. Um, then yeah, you sell 20 grand at a price you're not very happy with, but you've still got 80 left. And you can hopefully make up any loss on that 20 with the 80 you've got. So you can't do that with a house. If you need 20 urgently and your house is worth 200, you have to sell the whole house. You can't just sell a bit of it.
Simon, thank you. I think that's a great place to stop. I think people really do need to get hold of you if they're interested in looking into the whole area of gold investment. How can people get in touch with you?
The best thing to do is, if you look at my website, the Gold Program, and there's lots of information on there. I've got lots of blogs as well, so you can kind of educate yourself and see if if gold's of interest to you. If it is, then there's a Gold Program. If you're not sure, there's a book and a few freebies which I think are very useful, which are 10.99. It's actually 9.99. So you can just put a toe in the water and find out more if it's suitable for you. But I'd urge you to do something now, because doing nothing is still actually a decision, and I don't think it's a great decision.
Oh, here, do it now and have a look, get stuck in and see if it's for you. And if it is, I know that Simon's very happy to have a chat with people that go via the website. So, Simon, thank you very much for this expose about gold. I think it's been a great discussion and it's been an absolute pleasure to have you on the show.
That's great to be here. Thank you very much.
Ah, it's a pleasure. And everybody listening and watching, thank you so much as well. Your support is always amazing gratitude to you. So thank you so much. Please do like, comment, subscribe, and share, because that's where people get to hear about this that absolutely could do with this. It's something that we really do need to be looking into, I think. So see you all again very soon and be successful. Bye bye now.